Good afternoon, everyone, and welcome to this webinar to introduce our current project on the targeted review of the New Zealand Accounting Standards Framework. Great to have so many people attending today. That's very much appreciated as we work through this webinar for the next 30-40 minutes or so. My name is Anthony Heffernan, Director of Accounting Standards at the External Reporting Board, and this afternoon I am joined with by Garly Sloosberg, the project manager who has been instrumental in the development of this project. Great to have Garly here today. Before we start, just a couple of messages. Please feel free to provide comments, questions as we work through the webinar on your side panel, where there's an area there for you to note down your questions. We will see how we go with timing. Hopefully we've got some time at the end to take those questions, or else we will be replying to selected questions at the end. And if we go over time a little bit, you can choose to stay online and listen to the responses to those questions, or you may choose to end and happily enjoy your lunch, which I have to say I'm also looking forward to. But we've got a lot of fun to be had for the next 30 or so minutes. So let's get started. Okay, so what's this targeted review all about? Just some opening comments before we go deeper into the content from myself. The New Zealand Accounting Standards Framework establishes a broad strategy approach for how we, the External Reporting Board, develop accounting standards that meet the user needs of many different types of entities that are required by legislation to follow our standards. The resulting accounting standards that come out of this framework establish the requirements for preparation of general purpose financial statements. It's always useful to highlight general purpose, so financial statements that are widely understood by a wide group of stakeholders. It's important that these standards are generally accepted by the accounting profession, and also equally important, if not more important, that they promote high quality financial reporting through promoting accountability, transparency, comparability, understandability for different user groups. To develop a framework that meets all these objectives requires a careful balancing act against cost-benefit considerations. Not necessarily easy, but that's what this framework is seeking to achieve, the broad strategy for how we develop those accounting standards. The current framework, or a current strategy for developing accounting standards that are appropriate for different types of entities, was first issued in 2012. That was after an extensive consultation process which started from 2009. For those that were around at the time, you remember this was a period of significant change where the framework was issued in conjunction with significant legislative reforms, namely through the Financial Reporting Act 2013 that introduced reduced financial reporting requirements for many for-profit entities, but at the same time significantly increased the financial reporting obligations for registered charities and many other not-for-profits. So it's a kind of a two-sided story at the time. Our framework was issued in response to those changes that came through from the government. And for many, and for myself, I'm happy to, well, I don't know if I'm happy to say, but I'm confident in saying that they were the biggest changes in financial reporting for 30 years. They were significant, and they did require or did result in some implementation pain for some entities going through significant change. But we've now been through 5 years of the new framework. Most people have now implemented the new requirements and are now seeing the benefits. But given that we've been through 5 years, after a period of significant change, it is timely and important at this time to come back to our constituent base, being you, and asking a check-in: is the framework working? Is it attending its desired objectives? So this consultation, being a targeted review of the New Zealand Accounting Standards Framework, is asking the key questions around: is the current framework working? Are there any significant issues arising in practice that maybe we don't know about at the XRB, we're very keen to hear about? Or are there refinements needed to the current framework, that framework for how we develop accounting standards, to ensure it remains fit for purpose in the future and continues to meet user needs in an ever and fast changing world? So what have we done? In late July, we've issued a discussion paper on this targeted review of the framework to seek your feedback. And we've issued a full discussion paper that is fairly long. It's over 60 pages, but there's a reason for that. And this is the full discussion paper that includes the background information on the original rationale for the decisions that were made back in 2012. Provides quite a bit of commentary on some of the recent changes that have been experienced and our thoughts on that. It includes research that we've done, and the XRB have had an active research program over the last 3 years on user needs, again to check in, is this framework working? So it provides some insights into the outcome of that research. So a lot of background information in the discussion paper, and more about the specific areas that we're seeking feedback on. But what we've also done, and which should be a relief to many, I hope, is that we've issued a summary document. And from my perspective, this summary document provides, for many people, everything you need to know in 6 to 8 pages. If you pick this up, it provides you the key information of what this framework's about, what we're seeking feedback on, and the information you need to provide a submission to provide feedback. But what it does really well is if there's areas that you want to know more about, you want to read more of the background information, then it provides those links to the full comprehensive discussion paper. So if you're a detailed person, you can press those links and go through and read a bit more about it. But I feel the summary document is a great pickup, and for many people will be all you need to know. So that'll be my starting point personally. What we've also done is provide quite a bit of information on our website. The information on our website is the same information that's in the discussion paper and in the summary document. But as you know, from a website, we can make it more interactive. We can provide links. The website is an easy way to get to the information you want the quickest way possible. Because when we think about this framework for how we develop accounting standards for different types of entities, you're going to have different aspects of it that you're interested in. There'll be certain aspects that charities are interested in. There'll be other aspects which for-profit companies are interested in. And many of us won't be interested in all of it. So the website does take you to the areas that are most applicable to you. And we've done quite a bit of work to make that as interactive as possible, so you don't have to read the whole thing, because you've got different needs for different types of entities. So for me, if I was picking it up, the starting point is our landing page, our homepage on our website. That page on our website gives you the full discussion paper, gives you the link to the summary document, gives you the link to the actual framework itself, and it gives you the links to different areas for different information based on what type of entity you are. So it's all there available for you. Okay, so that's some introductory comments. We have issued a discussion paper, and that's what this is about, and getting feedback on that. So now we're going to provide some introduction into what the New Zealand Accounting Standards Framework is. Actually quite important that we make sure we clarify that, because that's what this framework, that's what this review is about, the New Zealand Accounting Standards Framework. Some brief comments on the story so far from our experience. And it's probably important to highlight this is our experience, this is the feedback we're receiving. Again, why are we going up for consultation? Because we want your feedback. What is your feelings around the application of the Accounting Standards Framework? Is it working? Talk about the objectives and scope. I've already touched on that quite a bit already. But why are we seeking feedback? What are we seeking to achieve from the targeted review? And then we have also got within the consultation document specific matters for comment, specific areas where we are seeking feedback. And those are areas where the XRB board do feel that there is magnitude for change. The areas that we specifically want to look at to consider refinements. But to get those refinements and changes right, again, it's critical that we get your feedback. And then how to have your say. We've got a number of ways, number of approaches of how to have your say. We've got some new approaches, which we're quite excited about, to make it as easy as possible for people to provide feedback. So we'll definitely be talking about that. Okay, so working through the content, the New Zealand Accounting Standards Framework, what is it? And explaining this is something that I quite often do for university students across the country. And I can quite happily talk about the New Zealand Accounting Standards Framework and answer the question, what is it, for maybe an hour and a half. I've got Gali next to me, raring to go with her sections. I'm going to try and do it in 5 minutes or so. Again, only covering this at a fairly high level. All the information, as much as you want, is in the full discussion paper. I'd start with a summary. To answer the question, what is the New Zealand Accounting Standards Framework? It is always useful to take a step back and consider the broader New Zealand financial reporting framework. And always important to highlight the who needs to prepare financial statements in accordance with GAAP. GAAP means you need to follow XRB standards. So who needs to follow standards issued by the XRB is established by the government. It's established through legislation. It's not the XRB's mandate to determine who should follow our standards. That is the government. So that is not within the scope of this review. If you've got concerns around your requirement to prepare financial statements, your concerns around the compliance costs, yep, have a chat to your minister, not necessarily the XRB. Happy to receive the feedback, but we haven't got much scope to change that. But what is the XRB's mandate, and what is within the scope of this targeted review is the what. If you've got a legislative requirement to prepare financial statements in accordance with GAAP, in accordance with standards issued by the XRB has got the mandate, the responsibility to issue those accounting standards. So the New Zealand Accounting Standards Framework is our broad strategic strategy for how we go about developing standards for different entities to make sure the user needs of all user needs are met for a wide group of stakeholders. So that's the New Zealand Accounting Standards Framework, the what. That's our broad strategy. It's not the accounting standards, it's the broad strategy for how we develop those accounting standards. Okay, so just a bit more comments on the broad or the fundamental building blocks of the New Zealand Accounting Standards Framework as it currently stands. So as you're listening to this, you could be thinking about, does this sound good, or do we need to consider changes? The Accounting Standards Framework is built around two key objectives. It's meeting user needs. I've talked about that quite a bit already. We've got different stakeholders, got different needs if you're a PBE, public benefit entity, different needs if you're a for-profit entity. But at the same time, we're conscious of the need to balance the cost-benefit aspect. Compliance costs. So of those two aspects of mine, the key elements of the framework, there's three of them, is that we've got a multi-sector approach. And for me, it's been around for a little bit longer now. This is a key difference between a sector neutral approach that some of us have been around. We used to have one set of accounting standards, one book that we followed as accountants. Now we've got multiple sets of standards for different sectors. So for-profit entities are companies, public benefit entities being our registered charities, and the public sector that are focused on providing goods or services for community or social benefit. Very different needs. For-profits trying to focus on their bottom line, trying to make money for their shareholders. Public benefit entities trying to service the community and provide better outcomes for New Zealand. So on that aspect, then it makes sense that you have different sets of accounting standards with a different focus. The next broad element is a tiered approach, that we do have different tiers under those sectors based on the idea that if you're a larger entity, your accounting obligations or reporting obligations are more onerous. You've got a broader group of stakeholders. You may have increased public accountability, so you should have increased reporting requirements. And the smaller you go, the less your requirements are. So we've got tiered standards, different sets of standards for different tiers based on your size and your level of public accountability. And then we've got a multi-standard approach. So different standards for different sectors, different standards for different tiers. And a key element of the current accounting standards framework is that those standards are predominantly based on international standards. That's a key decision made in the framework that we will develop standards in New Zealand based on international standards. In recognition of New Zealand's size, it's not very cost efficient to be developing standards in New Zealand here from scratch. And also there's many arguments for the benefits of using international standards. So weighing those two things up. Also, very important to highlight that in the PBE space, that for Tier 1 and Tier 2, the standards for PBEs, being registered public sector entities with over $2 million of annual expenditure, are based on international standards. But we have also got Tier 3 and Tier 4, mainly used by registered charities, those very small entities with expenditure less than $2 million. We'll highlight now that we have heard feedback talking with charity services that there has been challenges for those small charities, Tier 3 and Tier 4, applying our simple format reporting requirements, and that we are going to do we have already confirmed or already agreed that we will do a separate standards level review of the Tier 3 and Tier 4 requirements. So while I talk about this review being quite high level on our strategic approach, our framework, not getting into the standards, for Tier 3 and Tier 4, we've already said we'll do a separate review and get into that and see if there's improvements we can make there to make it easier for people to apply. So look out for that. Okay, so the story so far, and this is the story so far from our perspective, and very happy to admit, as the Director of Accounting Standards, I've probably got some bias. Again, that's why it's vitally important we receive your feedback. But from our perspective, we feel that it's been a success story. We've heard mainly positive feedback. I've heard some comments about certain aspects of accounting standards, certain requirements that people might not necessarily like. But from a broad perspective, our strategy of a multi-sector, multi-tiered, based on international standards approach has been a success. And we've had feedback from the for-profits, the public sector, and the not-for-profits. Again, highlighting there's a bit of an exclamation mark there in yellow that we have heard feedback from in relation to our Tier 3 and Tier 4 standards, and we're going to do a separate review of that to see what we can do. But in saying that, we've heard feedback about Tier 3 and Tier 4, but I've also heard some wonderful feedback from Tier 3 and Tier 4 entities that they love our templates, they love reporting their service performance information. So you always need to weigh up the good with the bad. Again, we need to hear your feedback. Is there anything we haven't heard? Is there any unintended consequences that are arising in practice that we need to hear about? There's a lot more discussion on the story so far and the research that we've done, independent research that we've done on user needs in the full discussion paper that's there for your information. Okay, so I'll just take this time to take a few minutes and take a poll question. Really interested in getting your initial feedback on these questions, and I'll just open it up and get you to have a think about just these opening questions around if you feel that we do need, if you feel that the accounting standards framework is generally working well at the moment, or do you feel that it's working well, but yep, there is room for refinements, and we're happy the XRB are considering this, and we're looking forward to provide a submission. Or you think substantial changes is required, the broad approach, the fundamental elements, no, they haven't got it quite right. I'll just give it 30 more seconds or so, but everyone's coming in. I can see results and I'll share it in a second. Oh yeah, I think I can see a consensus here. And I'll share the results. This looks fantastic, and to be perfectly honest, I wasn't sure what the response would be. But this kind of does match our expectations at the moment. It is very nice, I have to say, to have 0% at the bottom, but the green is perfect. That's what this is all about. It's working well, we feel it's working well, but we need to receive feedback. We want to receive feedback on where we can make improvements. so we get that right. So thank you, that's very useful and highlights that it's worth carrying on this webinar. Okay, so just some brief comments again before I hand over to Gali, and just broad level the scope and objectives of the review. This slide here really covered already in my opening comments. The whole purpose of conducting the targeted review is a check-in. Is the framework working as intended? Are we achieving the underlying objectives? And you can see there at the bottom the two main objectives, user needs and balancing those costs and benefits. We don't want the compliance costs being greater than the benefits that have been achieved through financial reporting. And we feel it is appropriate to do this now after 4 to 5 years. What I can note now is that, and again, this is a targeted review, it is rather limited. It's too soon to be making significant changes, especially for those sitting there thinking, we went through all these changes already, we don't want the world to change again. From my perspective, I don't feel that's going to happen. That's not the objective, and that got highlighted in that previous slide where no one said substantial change was needed. But we have earmarked a plan to conduct a comprehensive first principles review, really going into the principles, the core principles, in 10 or so years' time, maybe 10 to 15 years' time, will be the right time to go back to consider the first principles again. But at the moment, it's a targeted review. Okay, so what is the targeted review seeking feedback on? When you work through the discussion paper, and all this information is in the summary document, there's two key groups of questions. And one is seeking general feedback, and the other one is seeking feedback on 3 specific matters for comment. And these 3 SMCs are areas where we do feel there is scope or potential to make some refinements, make some changes. So we're very keen to get feedback on the 3 SMCs to inform us so we get it right. Last slide from me, just noting the scope, and I think many of these I've already touched on, but on the easiest way of explaining the scope is explaining what's not within, what's out of scope. So I've already highlighted, it's not the WHO, that's the government, and there's a number of things going on with government reviews at the moment. I think about the Charities Act review, there's things going on with incorporated societies. Those reviews are specifically addressing who needs to prepare financial statements in accordance with standards issued by the XRB. Those reviews are being conducted by other government departments, not the XRB. We set the accounting standards. We're not seeking feedback as part of this review on specific requirements and accounting standards. So if you don't like reporting related party disclosures, if you don't like reporting key management remuneration, things like that, my apologies, but now is not the time to do that. Very happy to receive that feedback anytime, to be honest, outside this consultation process. But this consultation is focused on the framework itself, and have we got the broad principles, have we got the approach right? And it's not the auditing assurance standards, that's very different again too. Okay, so with that, I think we've done well with time. That's some of the broad comments. And now I'll hand over to Gali, who's going to provide some insights into the 3 SMCs, specific matters for comment, that we're very keen to get feedback on, because these are areas that we are potentially considering changes.
Thank you, Anthony, and hello, everyone. So the first specific area of the accounting standards framework on which we're seeking your feedback is whether we need to refine our strategy of developing PBE standards for public sector and not-for-profit PBEs in Tier 1 and Tier 2. Our current strategy for developing PBE standards for Tier 1 and Tier 2 PBEs is to maintain close alignment between PBE standards and International Public Sector Accounting Standards, or IPSAS. This strategy involves a rebuttable presumption that we will wait for the International Public Sector Accounting Standards Board, or the IPSASB, to issue an IPSAS before developing a PBE standard on the same topic, rather than developing a PBE standard ahead of the IPSASB. There is also a rebuttable presumption that the XRB will adopt a new or amended IPSAS into PB standards, with modifications being permitted only in specific circumstances. Now, these presumptions can be rebutted, but at the moment there is a high hurdle for doing that. So in general, the current strategy for developing PBE standards avoids developing a PBE standard ahead of the IPSAS-B and also limits the extent of changes that we make to an IPSAS when developing a PBE standard. Now, this strategy of close alignment with IPSAS worked quite well in establishing the initial set of PBE standards when the accounting standards framework was first introduced. But maintaining close alignment with IPSAS, while also ensuring that PBE user needs are being met, has been coming under increasing pressure recently. The main cause of this pressure is recent developments in the IPSAS-B's strategy and work program. So initially, IPSAS were closely based on IFRS, which are the standards used by for-profit entities. But recently, the IPSAS-B's work plan entered a new phase, which has an increased focus on major public sector specific issues, which leads to increased divergence between IPSAS and IFRS. At the same time, the IPSAS-B also has a recent strategic focus on encouraging wider adoption of IPSAS internationally. And this means that new IPSAS, including those large public sector specific projects that I mentioned, are being developed by the IPSAS-B to meet the needs of a wide range of international constituents, including governments in the countries that are only just transitioning from cash accounting to accrual accounting. And as you can imagine, many of these international constituents are quite different to New Zealand, where public sector PBEs have been applying accrual accounting for many years now. So the concern here is whether these new IPSAS are going to fully and appropriately meet the arguably more sophisticated needs of New Zealand PBEs and of the users of their financial statements. And finally, recently it's been taking the IPSAS-B increasing periods of time to develop IPSAS based on new IFRS standards. And this leads to increased periods of unnecessary differences between IPSAS and IFRS. What I mean by unnecessary differences is differences that are caused purely by the time lag between a new IFRS standard and an IPSAS that's based on that standard, rather than differences that reflect the inherent differences between our for-profit and public benefit sectors. Because of our current strategy of close alignment with IPSAS, this means that this time lag creates a mixed group issues in New Zealand. This means that our PBEs with for-profit subsidiaries have to keep making consolidation adjustments to take into account unnecessary differences between PBE standards and NZ-IFRS that result purely from the time lag between the two sets of international standards. This also means that PBEs can't benefit from the most recent thinking that new IFRS standards bring into the for-profit sector until several years later. So with these emerging challenges in mind, the XRB is considering whether a change in our approach is needed in terms of how we develop PBE standards going forward. There are two possible roads that we can take. The first option is maintaining the status quo, which is close alignment between PBE standards and IPSAS. This option doesn't address the recent challenges that I mentioned, but it does maintain our status as a standard taker of international standards, and it makes it easier to explain on the international stage what standards are applied by New Zealand PBEs. Also, the IPSAS-V expects more governments around the world to adopt IPSAS in the future. So for public sector PBEs, maintaining close alignment with IPSAS would mean more comparability with other countries' governments and public sector entities. The second option is taking a more flexible approach to developing PBE standards, which involves an increased focus on addressing local New Zealand considerations ahead of focusing on maintaining close alignment with IPSAS. Under this option, we would still use IPSAS in the process of developing PBE standards, but we would have a lower hurdle to jump, so to speak, when it comes to moving ahead of the IPSAS-V or adopting a new IPSAS into PBE standards or modifying an IPSAS when developing a PBE standard. So this would mean that we would have more flexibility on the timing of when new or amended PBE standards are introduced, and we would not necessarily wait for the IPSAS-V. And it also means that we will have more flexibility on whether to adopt or modify the requirements of a new or amended IPSAS to reflect local considerations. Now, this option would enhance the XRB's ability to address the needs of New Zealand PBEs and the New Zealand public in a timely manner, and it should address the emerging challenges that we've just discussed before. But this would also mean that PBE standards would be less aligned with international IPSAS. So really, the key question is how important is close alignment between PBE standards and IPSAS? And should our strategy for setting PBE standards prioritize local considerations ahead of close alignment with IPSAS, or is close alignment with IPSAS more important? If close alignment with IPSAS is very important, then perhaps maintaining the status quo is the way forward. But if we hear from you that focus on local considerations is more important than close alignment, then we would consider taking a more flexible approach when developing PBE standards in the future. The next area, specific area on which we're seeking your feedback is, the next area in which we're specifically seeking your feedback is the importance of harmonization with Australia for Tier 2 for-profit disclosures. So we were talking about public benefit entities before, and now we're talking about for-profit entities. So if you're not sure which for-profit entities are in Tier 2, please have a look at our discussion paper or the summary document where we explain this in more detail. An example of the types of for-profit entities that are in Tier 2 would include large privately owned and overseas owned companies which have not issued shares or bonds to the public. And there's definitely some small print to consider when determining whether a for-profit entity is in Tier 1 and Tier 2, but I won't go into this today. For-profit entities in Tier 2 apply NZ-IFRS with reduced disclosure requirements, which is known as RDR. NZ-IFRS RDR include the same recognition and measurement requirements as full IFRS standards, but they also provide disclosure concessions. The disclosure requirements for Tier 2 entities, so the RDR requirements, are currently harmonized with Australia. And the reason we're looking at this area now is that the Australian Accounting Standards Board is currently considering changes to its approach for developing Tier 2 disclosures. At the same time, on the international stage, the International Accounting Standards Board has a project that might result in a set of accounting requirements that could eventually replace the Tier 2 regime in both Australia and New Zealand. But this international project will not be finalized before the changes are introduced in Australia. So if the change in the approach to Tier 2 disclosures in Australia causes us to lose some trans-Tasman harmonization, we will need to consider whether to introduce similar changes in New Zealand. Or another potential consideration could be whether it's potentially more cost-effective to wait until an international solution becomes available. And that's why we want to hear your feedback on how important is maintaining harmonization with Australia for Tier 2 for-profit disclosure requirements. I would imagine this would be quite useful to have this harmonization for companies that are subsidiaries of Australian parents, but others may or may not have a different view. Your feedback will help us when we come to looking at our approach for considering the potential upcoming changes in Australia regarding Tier 2 disclosure requirements. The third specific area where we would like to hear your feedback is whether the PBE tier size thresholds need to be revisited. So as Anthony mentioned, the accounting standards framework includes a tiered approach for developing standards for PBEs. And you can see the tiers on the slides. We've got 4 tiers for PBEs. And the lower the tier, the more simplified are the reporting requirements that apply to PBE in that tier. So for example, PBEs in Tier 1 and Tier 2 apply PBE standards, which are based on international standards or IPSAS, with disclosure concessions for Tier 2, whereas PBEs in Tier 3 and Tier 4 apply our simple format reporting requirements. So all PBEs with public accountability are in Tier 1, and public accountability is a defined term, which I won't go into it today, but please have a look at our summary document and discussion paper. But other than that, the tier into which a PBE falls depends on the PBE's expenses. So PBEs with expenses above 30 million are in Tier 1. PBEs with expenses between 2 million and 30 million are in Tier 2. If you have expenses below 2 million, you're in Tier 3. And if you have operating payments below 125,000 and your legislation says that you can be in Tier 4, then you are in Tier 4. And what's important to mention about this threshold of 125,000 is that we at the XRB don't have a mandate to change this threshold because it's actually set in legislation. So we are not aware of significant concerns regarding the PBE tiers, but this targeted review is a good opportunity to check in with you about this, given that the tier size thresholds did not change since the accounting standards framework was first introduced. Please bear in mind, though, that as I mentioned before, we can't change the size threshold for Tier 4 because it's set in legislation. So if you're aware of any unintended consequences or recent developments that would require changes to the PBE tier size criteria, this is your chance to let us know. If you are interested to learn more about anything you've heard today and in giving us feedback, I encourage you to read our summary document, and for some of you that will be all the information that you need will be in there. Or if you need more information, I'd encourage you to read our full discussion paper. Both of these documents are available on our website. And like Anthony mentioned, our website also provides summarized information about the targeted review, and it's quite interactive and easy to navigate to the part in which you're most interested. There are 2 main ways in which you can submit your feedback. The first one is by completing our online submission form, and I recommend going that route because this form is quite easy to use. And also, you don't have to answer all the questions. You can answer only those questions that you're most interested in. But of course, you're welcome to answer all the questions too. Alternatively, you could upload your submission as a document through our webpage. And if neither of these ways works for you, please have a look at our discussion paper, which explains alternative ways of submitting your feedback. And just as a reminder, the feedback closes on the 15th of November. And I will close by saying that your feedback is very important to us, and it will help us ensure that our strategy for developing accounting standards for New Zealand entities remains fit for purpose in the future. So we would really appreciate your feedback. And now, have we got any questions? Oh yeah, we have received questions, so I will pass over to Anthony to answer those.
Thank you, Gali. That's excellent. Absolutely fantastic. I've just seen 2 questions come through, and they're really just procedural ones. One was if the slides will be made available, and the answer will be yes, the slides will be available on our website very shortly. And 2, Second question, are we recording the webinar? And again, that's an easy answer. That's a yes, we are recording the webinar, and that will be made available again on our website. So very happy for you to share that with other people so we can get as much constituent engagement as possible. But unless anyone's holding back a question, I want to fire it through. That's all I've seen so far. No, I'll take that as we've made complete sense, that you've enjoyed the presentation, and all that's left me to say is enjoy the rest of your day, and we look forward to your submissions. Thanks very much for attending. Good day.